Happy Friday. We made it, y'all. So, those of you that are in Georgia, I hope you guys are cold enough. I am. I'm definitely cold enough. I don't know if you guys know, but I'm originally from Miami, and I still haven't got used to the cold. I've been here since 2009, and I'm just used to sunny weather. Our cold is like 60 degrees. So, today's show, we will be talking about qualifying for a mortgage in today's market. And the reason why I thought this topic was important is because I did my research. So a lot of people are Googling and asking, how do I qualify for a mortgage in today's market? So some of you guys purchased a home years ago, and times have changed. And I will tell you what happened. So I'm gonna tell you a story on how we got here. So in 2008, when you guys know when the real estate market kind of crashed, a lot of homes went into foreclosure. It was a big deal, and the reason why it was a big deal, a lot of lenders at that time were giving people mortgages that should not have a mortgage. They weren't ready. They weren't financially ready to become homeowners. And what they were doing, the program that they were putting them under, a lot of them were like 2-3 year fixed, and then a balloon payment. So what that means, you pretty much paying the interest only for 2 to 3 years, and then once those 2 to 3 years are over, your home mortgage is due all at one time. Now, for those of us who have mortgages, you guys know that it's not cheap to pay the whole payment. So imagine you purchased a home for $250,000. You only been paying the interest, not principal, and in 3 years you owe $250,000. So essentially, that's what was happening. People were getting mortgages, thinking, okay, I could refinance in 2 to 3 years, but it wasn't happening. By the time the 2 or 3 years hit, you have to pay that whole balloon payment. So that's pretty much part of what happened in that time, and why you saw a lot of foreclosures. A lot of people lost their homes because who has $250,000 just sitting around to pay a home mortgage off? So ever since that time, lenders started becoming more strict on approving people for mortgages. Now, I will say it's still, there's still ways to get a mortgage and it's not as strict, but I will say from 2008 to 2024, it's definitely a difference. So now the people who think it's going to be a market crash, the lenders are going to, you know, do something crazy. They're not. They're now doing their due diligence now to make sure that there's qualified people who can afford to pay their mortgage that get qualified for a mortgage. Now, my job as your trusted advisor, as you guys know, Trisha the Realtor, as you guys know, that my job is to give you the tips and tricks to get you ready to get qualified for a mortgage because of these reasons. Because we want you to be ready for home ownership. And not only do we want you to be able to purchase your home, we want you to be able to keep it, right? So that's what sparked on today's conversation about making sure that you're ready in today's market, as opposed to, when I say hit back in the day, it wasn't as strict. So there are some ways. So let me go back. So today we're in October. So we have 2 more months. So there's still people that are like, I want to get home. I want to be in a home before Christmas. It's still doable. It's still doable. Or whatever holiday you celebrate. I don't want to just say Christmas. But before the holidays, I want to entertain my family in my own home. And that's perfectly fine. And it's still doable. So my job today is to let you know, what can you do to be prepared for home ownership. Not only to December, that could be your next year 2025 goals. You know how we always say, new year, new me. Maybe that new year, new me is a home. So I want to give you those tips to get you ready for that. So now, I will say that even though mortgages are, I mean, lenders are a little bit more strict on mortgages, you can get a home at a 585 credit score. Yes, a 585. Now, with that being said, though, if you have a 585 score, I will say definitely try to bring it up, because 620 is where I usually say 620 is kind of like a good spot to be in, only because the interest rate is going to be different. But now, if you're okay with having a higher interest rate and you can refinance in a couple of years, then okay, go ahead with the 585. Or if you have to move right now, the 585 is fine. My other tip is going to be, from today, if you have been paying things late, stop paying things late, especially 30 days late. So honestly, you can pay things late, but it can't be 30 days, because 30 days is what reports to your credit. Okay? So what that means is that when you have a payment, let's say it's due on October 16th. For whatever reason, you don't have the money on October 16th. Before November 16th, make sure that payment is made. Now, I'm not advocating for you to pay late. I'm saying if you have no choice but to pay late, pay it before 30 days. I really advocate to not pay anything late from this point on. Make arrangements, do whatever you need to do, but don't have lates, right? Because that's the biggest thing that lenders look at. They want to see your history of paying, because in their mind, if you're paying other things late, you're going to pay this mortgage late, right? So you want to make sure that you don't pay anything late. Now, another reason that I would suggest a 620 is on the FHA product, you can have 3.5% down, which is not too bad. You will, basically get approved with that 3.5% down. But there are some programs that you pay nothing down if your score is 620 or above. So yes, you can get approved with a 585, 580 some cases credit score, but sometimes you don't get all the perks, right? You can get the 3.5% down, but you may not be able to qualify for nothing down, or down payment assistance. There's different things that you may not be qualified for at that 580, 585 credit score. So as much as you can get, as high as you can get it, do that. So I did give you some tips and tricks before on how you can raise your score. Number one, stop paying things late. Late payments kill your score, because that's 35% of what they look at on your credit score is late payments. Now, if you have credit cards, if your utilization is high, then you got to bring that down. So what that means is, if you have a $500 credit limit, you should not be using the whole 500. You should be using either 10% of it, 15, 20, or 30% max. And why that's important is because basically there's the lenders are looking at, like, okay, she has a $500 credit limit, but she's using the whole thing. Can she really afford a mortgage? So now, if you are able to pay off the whole thing, that's great. But if you could get it down to 10%, that will actually boost your score. For those of you who do not have credit, there are things that you can get, like self-lender is one of the ones I always advocate for, because I actually did it. They're not paying me or anything to say that. Self.com is one that I have used. Getting a prepaid card from your bank. So basically, you tell them that you want to get a prepaid card. You put whatever amount on there, whether it's 200, 300, 500, 1,000. And then once they start seeing you pay it off, they will transition it to a regular credit card. And either way, it's going to report to your credit as long as you are paying on time. Well, it's going to could be on your credit if you don't pay on time, but the purpose is to pay on time so that you can convert from a prepaid to a regular card, right? And make sure that utilization stays down. So maybe you get this card to just put groceries or gas and you pay it right back. That's, that's the way to show that you are responsible with credit, right? Those are things that they look at. They look to see if you're responsible, right? Now, a lot of people think that you have, to get ready for a mortgage, I need to save up 20% of whatever the house is going to be. That's incorrect. 3.5, 3%, 5%. You can put 20% down if you have the money to do that. But if you don't, I wouldn't stress out trying to get 20%. Like I said, there's even some programs. Now, if you're a teacher, firefighter, police, a doctor, there's a lot of programs that you don't have to put anything down. So you don't have to worry about 20% or the 3.5%. If you're a veteran, you don't have to pay a down payment. So I don't know why is this still a thing, but 20% is not true. You can put that, but that's not, a lot of my clients do not put 20% down. 3.5%, 3%, 10%. Rarely ever 20%. Unless someone is already a homeowner and purchasing another home and using the proceeds from that home to purchase. That's when I see it. But your first home, saving 20%, that would be amazing. But I wouldn't stress myself trying to do it. Right? So in today's time, you can still purchase a home with 0, 3, 3.5, 5% down. Right? And so those are things that they're looking at. They're looking at your credit score. They're looking to see how much down payment you have. And we're going to talk about debt again. They're going to look at how much debt you have compared to how much money you make. So, if you make $5,000 a month, right? But all your bills equal up to $4,500. Well, how are you going to qualify for a mortgage if you're using a lot of your money to pay your bills? So that's why they look at your debt to income. They look to see, okay, if I add another debt to this client or this, person that's looking to purchase, are they going to have any money left? And that's important because the banks want to get their money back. Period, point blank. They're giving you a lot of money. They want it back. So if you're already at the tip top of what, your debt to income is, they're not going to approve you. So when I talk about utilization, that's the reason to get that utilization down, is so that they can see, okay, this person has enough income to take on another debt, right? Because if you're already struggling, you're not going to add something else to your plate, because they don't want you to get a home that you can't afford, because that's not in their best interest either. And it's definitely not in yours. Like, you're already at the tip of your debt and you want more debt. That's not what you want. So think about those things when you're about to apply. In today's market, these are the things that they're looking for. You're looking at your credit. They're looking at your debt to income. And then your employment. Have a job. I mean, it's simple. Just have a job. Don't quit your job. Make sure you can't go from a W-2 employee to a 1099 employee when you're looking for a job, when you're looking to get approved from a mortgage, because they're calling that job to find out how you get paid. So they're going to find out. So if you're about to purchase, make sure you have a job, full-time job. Unless you've been working that part-time job for more than 2 years, and with that part-time job, you're able to, qualify for a mortgage, then that's fine. But if you are full-time going into part-time, and you don't have the income, then they're not going to approve you. So don't quit your job. In today's market, don't quit your job, because they are going to. So back in the day, it's a letter from the employer is enough. Oh yeah, this employer said that she gets this and she gets that and she qualifies. Check mark. No, now they not only need your pay stubs, a letter from your employer. They're calling your employer their day of closing to make sure you have a job, especially during COVID time. Oh yeah, they were calling the day of. Is your job? Is her position or his position still intact? Because a lot of people got laid off during COVID time. So they want to know, does this person still have a job? They're calling the day of closing. So imagine, oh, I'm already approved. I'm going to quit this job. And they call your job the day of closing. And you have nothing. So, yeah, think about that. When we get back, we're going to talk some more about things that you need to get ready for if you're looking to purchase in this market, 2024 going into 2025. 404-361-1571, 1570, and I'll be right back. Hey y'all, I'm back. I love that song. Okay, so if for those of you who don't know, my direct number, if you are looking to purchase before the end of the year, next year, my direct number is 678-849-4734. And while I'm here for the next few minutes, 404-361-1570. And I can answer any questions online for you. But we were talking about employment. So yeah, so make sure that you have income, but also verifiable income. And then, so some people feel like, oh, well, I can't quit my job and go to another job. No, that's not true. You can quit your job and go to another job, but they're going to want to see a 2-year history. They don't want to see a break in that 2 years. They don't want you to have like a 3-month or 6-month like break in between that. But you can have 2 different jobs, as long as it's a 2-year history. That's verifiable. That you can verify that you worked for 2 years. Okay. So now, of course, mortgage pre-approval is what we're looking to have, and that's why these things are so important. So mortgage pre-approval, there's 2 ways to get a mortgage pre-approval. There's one where they just pull your credit, and based on your credit, they say, okay, well, they basically approve you based on the application. They just look at your application, look at your credit, and say, okay, based on your application, what you told me that you make, what you told me that you what we see is your credit score, and they approve you just based on that. I don't like those kind of pre-approvals, to be honest with you, because it's not the whole picture of who you are. Now, if you are ready to purchase, these are some things that you're going to have to make sure that you have readily available. And these are the kind of approvals that I like. The approvals where they looked at your pay stubs, because you're going to need 30 days of your pay stubs. The approvals where they looked at your 2 months of bank statements, your 2 most recent bank statements they will look at. The approvals where your tax returns have been looked at. Some lenders need tax returns and some lenders don't. But if you have it ready, get it ready. So those approvals I like because they know your whole picture. They're not just going from what you said. They're going from what is verified. And why that's important is during the process, you don't want anything to pop up that they didn't know about from the application. So a good pre-approval is one that they have verified what you put on the application. If you said you make $5,000 a month, they're going to pay stubs that show it. There goes the bank statements that show it. Everything's verifiable. that's a good mortgage pre-approval. So now, saying that, that is what you need to have ready when you're ready to purchase. You know, have those 30 days of bank statements. Now, if you are self-employed, if you have, so when you're self-employed, you need at least 2 years of verifiable tax returns. So they don't, of course, you don't have pay stubs. You have 1099s when you are self-employed. So they want 2 years to see how that business is doing. 1 year would not be enough. Some banks or lenders, they will ask you for 12 months of bank statements. Me personally, I don't want them in my bank statements. I'd rather just give you 2 years of my tax returns. But there's more than one way to skin a cat. So if that doesn't work, if you don't have the tax returns and you don't mind them going into your bank statement, then some lenders have the 12 or 18-month bank statement program, and they'll average how much you made during that time. But they do want at least 2 years to show what's your income. So they may even ask for the whole 24 months of bank statements. So if you're self-employed and you're looking to purchase and it's only year one, you have 1 more year for them to really see kind of where you are in your business. And then, so those are the things that you have to have ready. So if you are ready to purchase in this market, and I will say the rates are going down. So a few weeks ago was 4.7, 4.8. I just had a client recently. She got pre-approved for 4.75. So the rates are going down. They're not as high as they were in the 7s and 8s. So that's a good thing. But even if they are in the 7 and 8s, I told you about when the rates start getting low, more people start buying. You can always refinance out of that, right? You can always refinance out of that high rate. So a few things I want to kind of go over again. I want to make sure that your credit score is a 620 and up. Although you can't purchase at 580, 620 is where I want you guys to be. And I want to make sure that you are down payment wise. Don't stress yourself trying to get 20%, but try to at least have 3%, 3.5% as a down payment. Your debt to income, your utilization, make sure that whatever credit cards you have, you're not spending every dollar that's available to you. Keep it between what I told you, 10%, 15, or 30%. That's it. Don't go over 30% on your utilization. Keep that as low as possible, and that will keep your credit score up as well. No late payments. Do not pay anything late from here on out if you are looking to purchase. From today on, make a promise, I will not pay things late. So keep that in mind as well. And in your employment, if you are looking to go to another position, make sure that when it's time to apply for the mortgage, that you have the verifiable income from the job that you're leaving and the verifiable income from the job that you are going to. Now, here's what happens. If you are transitioning to another job, and they're going to ask for the offer letter, and they're also going to ask for your first pay stub from that job. If you are a W-2 employee, so it's not just the letter is going to be enough. They actually need a pay stub, and sometimes you can get away with it not being. But I'd rather you be prepared. Since you are being proactive, I'd rather you have that up front than not. You don't want anything holding up your closing. Because generally, once you're under contract, it's 30 days. It's fast. So you want to make sure that you have those things ready up front so you don't have to worry about and squirm for it later on. And then for your mortgage pre-approval, once again, we want to have these things ready. I didn't mention this before, but of course they're going to ask for your ID. They're going to ask for your social to make sure you are who you are. But then they're also going to ask for your 30 days of pay stubs, 2 months of bank statements, and your tax returns. That is a good mortgage approval. Once they look at all that and they give you an approval, that's a good mortgage approval. The other approval, I'm not saying that it doesn't work, not to say that you guys lie, but it's just that it's not your whole picture. So that other approval where they just ask for your application and your credit, it's okay, but it's not your full picture. So those are two approvals that essentially you could have, but I want you guys to be prepared for that. Um, and then right now the market is shifting. The rates are a little bit lower. The rates had gone up to like 7.58 a couple of weeks ago, and up to now I have clients at a 4.7, 4.5. So that's actually a pretty good. So they're actually going down. And because people are not buying as much, there are programs out there that helps with the down payment. And some sellers are willing to pay and help pay for your closing costs. So in today's market, there are ways to purchase. Um, there's some workarounds and things like that that you can pretty much have to get you on track and ready um, to become a homeowner. So like I said, if you are looking to purchase now or in 2025, new year, new you, my direct contact number is 678-849-4734. And on the socials, IG, Facebook, and TikTok, Trisha the Realtor. You can find me on those platforms if you want to talk to me there. And yeah, I'm excited for who is ready. Like the song that I played on break that says I'm getting ready. That could be you, ready for your blessing of getting a new home. So I'm excited for you guys. I'm excited to work with you guys, and I can't wait to see who's up next. So, and stay warm, y'all. It's definitely it's cold in Georgia. But anyway, I hope you guys have a great day, a great weekend, and I will see you guys or talk to you guys next week. Happy Friday, y'all.